China trade, impeachment. What a week. What's up, everybody? Welcome aboard to Bubba's Bottom Line. What a week. Not much happened in the markets, but certainly a lot of activity with China trade and with impeachment. And of course, the big news of the impeachment talks and what did President Trump do wrong with the Ukraine leader? I don't know. It looks like the squad has full control of Nancy Pelosi, but we'll talk about that in our commentary later today. In the meantime, during the week, a lot of stuff with China trade that pushed markets down, that pushed markets up, and all of a sudden we heard Friday that some of the Chinese stocks may be delisted. You know, A, that's not going to happen, in my opinion. B, it's another negotiating ploy, and I think that it'll work out just fine. I think we're making, there's being far too much made of this, and I think the biggest key to always understand is to watch how the markets react. What it comes down to at the end of the day is money. Okay, that you can look at life any way you want, but at the end of the day, the money will tell you if there are some real issues or not. And so far, the markets have not had a crack. So they're very close to all-time highs. And again, we'll talk that market segment. But at the end of the day, that tells you everything that you need to know for now. Now, again, it doesn't mean that it won't get bad. It doesn't mean it won't get worse. But right now, again, the markets and the money give you the sense of where we are. And right now, the markets continue to run higher, or at least stay near all-time highs, no matter what's going on. So that should be your first big clue as to how seriously these threats or whatever are being taken by the U.S. stock markets. Okay. Now, again, is a collapse coming in the markets? I just say this. Okay. I believe that the next big down move or the next big move in the markets will be down. However, that does not mean that the markets will not drift higher for another 1,000, 2,000, or 3,000 points. I mean, again, when I say the next big move, what I mean is a move with volume, a move with speed, a move with activity versus what we've really been experiencing for the last couple of months, which is virtually a dull market, non-trading environment that really hasn't pushed anything. So again, I don't predict markets. In fact, as you know, those who listen, we're long. So again, I'm not predicting anything. Okay. And I think this is one of the important things that you have to understand. I'm trading mechanically based on some proprietary algorithms. I could care less about the news. In fact, I don't watch the news. I'd rather watch baseball or football. But I think you're seeing some overall market complacency. That's never a good sign. Okay. It's never a good sign when many CEOs are liquidating their long holdings. Okay. That is not a good sign for the future. Okay. And many CEOs are getting out of a lot of their long holdings ahead of, whatever. Either they've got some concerns or they've got some inside information as to what's going on with their companies, whatever. I mean, they have to do it, through the letter of the law, which they've got to disclose what they're doing before they can do it. So, but again, then you take a look at the IPO markets. We saw everybody who followed the story with WeWork. We wrote about it a couple of times, but WeWork is a disaster. That's not even going to get a chance to go public. And they had to get another 10 billion or 1 billion, I think, from SoftBank to then open up and create another 6 billion in loans. Okay. At a company that's probably never going to make money. Now, again, is this time of the markets the same as it was in the 90s? Well, no, it's not exactly the same. But when you start pushing companies that don't make any money and possibly don't have the prospects of making money, and you continue to push them in the market and you get investors to invest in them, that usually indicates, again, another potential problem. Okay. So we've gone through many this year, but I mean, the most recent Uber, I mean, Could they make money? They might. I don't know. I can't ever see how they'll ever make money, but they could. Lyft, but they're both severely off of their original IPOs. Peloton came out, okay, and of course, Peloton. I don't understand how they're ever going to make money. That's just my opinion. I don't know. But they have Peloton has nothing proprietary for their $4,000 treadmill, okay, or their $2,000 bike, okay. There's technology, nothing they have is a proprietary mode. So can't somebody knock them off? And do we not remember Nautilus? So again, but the bigger story here is not the individual companies. It's the fact that we're not seeing the big stretch and the big reach for these IPOs anymore. Now, you go back earlier in the year, there was a big reach for them. We'll pay anything because it doesn't matter if we make money or not. Okay. Well, all of a sudden now people are starting to say, well, maybe it does mean we can make money. Okay. But we're really have been sitting, in a sideways market. Okay. That hasn't done anything. All right. And that's again, where we look to see if there's real concern, because again, that's where the action, shows up. Now we're coming to an end tomorrow of you consider a pretty crazy quarter. I mean, there was a lot of gyrations. We didn't go anywhere. I mean, we've been in this miserable, wide sweeping pattern of consolidation with not much going on. But again, you look at what is going on underneath the surface. And, we believe, and I believe that we're in the very early stages of a recession. Okay. And again, it doesn't mean that it's going to be tomorrow. Okay. It means that there are warning signs showing, I've listed a couple already. You've got Janet Yellen out there talking about, that the Fed is being too optimistic. Now, again, I'm not a big fan of the Federal Reserve. I'm not a big fan of the central banking system. Okay, I think it's a bunch of crooks, in my opinion. Okay, I don't think they have any clue of what's going on, and it's basically destructed the dollar or currencies, and of course it then brings you into a position, okay, that you have to make more money to live the same lifestyle that you lived, but yet there's no inflation. So I don't get the balance here, okay, and I don't get what they're doing. I do understand the need now for lower rates. However, if we would have left all of these banks, okay, to do what they're supposed to do, okay, and let the free markets trade these interest rates, okay, and again, because the free market will determine what an interest rate is worth. It's like when you sell a product, what is the true price discovery market, okay, and that's you watch that even when you watch an IPO. There's buyers and sellers, and they will meet at some point, whether it be higher or lower. But again, this goes back to the central bank interventions around the globe and doing stuff that is just ridiculous. But of course, it allows the governments to keep amassing massive amounts of debt. Okay, you don't think that the debt is eventually going to come into play? Okay, somebody's going to have to pay that money somehow. There's no possible way that they're going to be able to relieve all this debt. Okay. Now, again, they can continue to try to kick the can down the road. And of course, we're now at, I guess the clock is ticking in the trillions. Okay. And of course, it only goes faster and faster. So do we really think that the debt will be forgiven and over? I mean, between, the government debt itself, between car loans, student debt, and these other things, I mean, it's almost comical or sad. Okay, that we cannot get past, where we can't be fiscally responsible. And again, it starts from the government and it goes all the way down. Okay. But of course, we are a by the month society. So as long as interest rates are low, we can buy more. Okay. And why not? We got jobs. Okay. And they'll never go away, right? They'll never turn the faucet off. Okay. So, again, this is unfortunately the attitude of many that, I'm only worried about today. Okay. And I'm only worried about, can I pay for it today? And how much is it going to be for the month? Okay. So you've got, these issues, and then you throw in the political issues, between Boris Johnson and the Brexit deal and what's going on there and what they're doing. Okay. You assume, okay, that there's somebody's got an edge to do something here, okay, which none of it really makes that much logical sense as we watch some of the things that are going on. So, if we look at, the data that's coming out, okay, the data has not been as good, okay. Now, again, markets do go through these ebbs and flows, okay, and certainly, we're not due for a correction, but we are pretty long in tooth in markets. And again, when you get these consumer confidence numbers up so high, okay, it's hard to continue to make them. But what you're really seeing is the actual retail consumer is very high still, but small business is lowering. Okay, big business is selling their own stocks. Okay, so while the average person on the street is out there buying, okay, who's the seller? The seller happens to be, the professionals, the companies, whatever, that are saying that more than likely we're going to see some sort of a slowdown. We saw a slowdown in GDP. Okay, so there's so many things out there that indicate that there's a problem coming. Okay, that you cannot continue to mask these issues, okay, by lowering rates. It logically does not work to the overall system to continue to try to manufacture inflation, try to manufacture spending, and all these things that they're trying to do. Because, again, the best system is to allow the free market to trade, which we obviously are not doing here. And this becomes back to the same story, which is why when we do have recessions and we do have sell-offs, they become all that much deeper. Because instead of letting a system, it's like letting a cold run through your system, right? If you just, if you drink a lot of water, maybe take some vitamin C, whatever, and you just go through your normal routine, a cold will go away in a week, okay? If you take medication for it, it'll go away in 7 days. I mean, right? So this is no different. You're masking what the real problems are, and if you just let them play out when they're small, I think you put yourself in a much better shot and a much better spot to deal with them. But of course, that would be too hard because our politicians would have a heart attack if they would have to cut their pay and wouldn't get their special health benefits and wouldn't have all the other bull that goes along with their horrible action in Congress and the Senate. Again, I'm not picking on a party here. This is the whole system is bust. Okay, because nobody wants to stand up and say we got to stop spending so much money. Okay, that's really at the end of the day where it comes. We've got to stop spending so much money. Okay, and on so much nonsense. Okay, so at some point there has to be a decision made. In the meantime, this is Bubba's Bottom Line. It is Todd Bubba Horwitz, and it is Sunday, September the 29th. Geez, the month is over. We're into the fourth quarter already as the quarter ends tomorrow. In the meantime, if you'd like to check out our webinar we did yesterday on our mini and micro portfolio management, please email me at bub@bubbatrading.com. I'll be happy to send you the recording. And of course, we've got our futures day trading from last week. And of course, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with me, your buddy, Todd Bubba Horwitz. Welcome back. It is Bubba's Bottom Line. It is Sunday, September the 29th. And of course, it is the start of tonight is the start of the Jewish New Year, and Lashana Tova to those who celebrate, and always great to have you aboard, and hopefully this will get to you before sundown. And in the meantime, last week markets were, lower. The end of the week was a little bit soft, but we're still within that consolidation range. We have not had any major damage yet to the market, and I don't know that will. I mean, again, as I said earlier, we're long equities. We're long all four, the Dow, the Russell, the S&P, and the NASDAQ, okay? And they could be close to changing, but they haven't changed yet. So, I think if you saw even the action on Friday, okay, where we had that big, steep sell-off, and it looked like it continued to run, and out of nowhere, we turned around and rallied back substantially towards the end of it. I think you have to look at, and this is one of the things that I want to help everybody with. To panic in markets is to admit defeat, okay, and to panic is to take the worst end of any part of a trade, okay. And I want to reference the gold markets, okay. I got so many emails last week of panic in the shrill in the emails about, oh, what's going on with gold? It's over. And look, I don't really care about news. If you trade news, you lose. Okay, you have no chance if you're trying to trade the news. But gold, we've got a solid support level at gold between 1495 and 1500. So we're long gold, and I am not selling gold until it violates and closes below 1495. It can go down there and test it. It did last week and came all the way back up. In the meantime, we closed the week on, I think, 1505 or 1510. Again, there's no reason to panic. If you would just sit back and watch the levels and watch the action and forget about the news, people want to know all this bad news, whatever. It doesn't matter. Price determines the next action, okay? Nothing else. The news is worthless, okay? Again, there's so much panic out there. You need to sit back and take a deep breath and then decide what you want to do. Never sell or buy in an emotional state, okay? Right now, we're still long gold, 1495, 1500, until it closes below, we're staying long. It's that simple, okay? The oil markets, we finally were able to short the oil markets, and we had a couple of attempts to take them down, and yet they couldn't break it. Now, again, it is lower than where we sold it, but again, it is, it is at a area and somewhere of support. It's trading in a range, and we expect that it will eventually break down. Again, I think that we see in oil, I think we see the high 40s before the end of the year comes over. And again, I'm going to still trade the mechanical method. Again, that's what we have the proprietary algorithms for, is so that I don't have to make an emotional decision, okay? And I understand how to read charts, and sometimes my overall opinion does not agree with the math, but I always go with the math because it's easier to default, okay, to math and not have to say, and then not have to make another emotional decision, because typically when you make that emotional decision, one bad emotional decision leads into another, which then leads into opportunity cost and a whole bunch of other bad stuff. Okay, so it's easier to be consistent, but never panic. Never let them see you sweat, as they say. We had the grain markets that looked like they're getting ready to charge. Okay, again, we're still short corn. Okay, but it's getting closer to turning. We are long wheat. We are long soybeans. I mean, they didn't have a great day on Friday, but again, overall, they look fairly solid and they look poised. I think it's going to be a great fourth quarter in the grain markets, as I do in the meats as well. Cattle, both fats, live, and feeder, looks solid. Okay, they have both broken out, and I would not be surprised to see some consolidation in these levels, okay, in these areas. But again, I think that overall they look terrific, and I think now we finally turned to being long hogs as well, and I think that they look pretty solid. So I think everything is setting up for the agricultural space, okay, as a big fourth quarter, and I think it's going to be great, and I'm excited for that fourth quarter because it does look like we're ready to pop. Now again, that could change, and we could change. Again, one thing about trading mathematically, if the equation changes, you got to change with it, right? So remember, it's that simple, okay? If you believe in the math, okay, if you believe in whatever system you're trading, okay, if you've got a system that you trade, okay, then just know what your hit rate is and what your percentage is, okay, and then you know exactly what to do. So your trading should never give you any anxious moments, because every decision is made strictly by the model or the system that you're using. When you get away from that, that is when you start to find ways to lose money, because you do not put yourself in a position to be successful. Okay. Bond markets, I don't know, they're churning back and forth. They try to go up, and we're short the bonds, for now. Actually, I apologize. We're back long the bonds now. My bad. Okay, we were short, and then we got long because, of course, they refused to go down, and which means that interest rates are probably going down. And of course, that would be consistent with what we would expect based on, again, when the rest of the world is in a global recession and they continue to lower rates, okay, and they're all negative, okay, there is no reason for the United States to be where we are. Now, again, I'm not a fan, so let's be clear, okay? I don't like central bank and Federal Reserve intervention, okay? And I think it's wrong. However, because they do it, okay, based on what the rest of the world is doing, we should lower. We should go to zero, okay? I know it hurts the savers, okay? That's the problem. But at the end of the day, if you know, the simple fact is that is the interest rate on the 10-year notes and the 30-year bonds and every other bond here is the interest rate that the United States is paying on the money that they're borrowing. Because when they're offering bonds, we're paying that interest rate. Okay, so why shouldn't we pay less interest? Okay, people are going to still buy them. So again, this is the whole strategy behind what is going on. This is what President Trump is talking about, which is, in this particular instance, he is correct. Okay, because every other central bank in the world is printing money and trying to maneuver down. Okay, and that goes back to now we come about to the dollar. Okay, now everybody's concerned about the strong dollar, which is only getting stronger. Okay, because not only is the dollar the world the reserve currency, it is also a place where people run when they're afraid. Okay, that is a fear asset that is being bought up. Okay, and no matter how much the Fed tries to manipulate the dollar lower, the other currencies continue to go lower. That is the whole fallacy behind this ridiculous fiat currency system that we went into once we went off the gold standard. Okay, it became an easy to manipulate product versus a product that had something underneath it. Now, again, it takes more. So that's the way that it goes. In the meantime, I expect the markets to be dull and churning. Tomorrow and Tuesday, Jewish holidays, there'll be quiet. Okay. Now again, we could break down. Okay, we could break out, but I would expect, based on where we are now and the action we've seen, to see a dull churn to continue. I don't see any reason for these markets to get overly excited yet. Of course, we will see. I mean, anything can change, which is why we do Bubba's Daily Update. Okay, but for now, I expect the dull market drift to continue. I expect not much more, and we'll see. We'll see how it does trade out. Of course, it could be thin, so there could be some wilder action in the next couple of days, but overall, we'll see how it plays out. In the meantime, this is Bubba's Bottom Line. I am Todd Bubba Horowitz, and of course, to my friends who celebrate, Lashana Tova, Happy New Year. May it be sweet. And of course, don't forget, if you'd like to get a recording of what we did yesterday with our micro and mini management portfolios, please email me at bubba@bubbatrading.com. And of course, don't forget our high school program at Patreon, patreon.com/Bubba Trading. And we're going to go get back to the show now, and we're going to with my commentary. So we'll be getting right back to the show. Welcome back. It is Bubba's Bottom Line, and of course, each and every week I give you my commentary, and been an interesting week. And we had the impeachment inquiry come out, and of course, we know that since the day that he was elected, or even before he was elected, the left has been trying to impeach Donald Trump. Okay, and of course, they're trying to find every reason, and it's kind of scary that there was a possible CIA plant inside the White House, looking for anything. It's like trying to find you when you make one little error. And again, I'm not defending what happened. I don't really understand all of the things that have happened. Okay, but I think, okay, if you want to go to a true conspiracy theory, okay, and if you believe the squad is really pulling the strings of Nancy Pelosi, okay, who looks like she should be embalmed, okay, then you could understand that not only did they create maybe some grief for President Trump for this impeachment, but at the same time, they took Joe Biden out of the race, okay, because we all knew that Joe Biden and his son had some shady dealings. Okay, so if you look at the conspiracy theory behind all this, Okay, you could assume that not only were they trying to aim a missile at Trump, okay, but also one at their own Joe Biden because he's too moderate for that party. Okay, because the squad wants to give away everything for free. Okay, because that's what they do. So you could think of it in that particular vein. Again, I don't know. That's just a thought I had, because I don't think they're going to be able to impeach President Trump. Okay, I think that this is a big fantasy of theirs to get him out. But I think they did sink Joe Biden with this. He was already on his way down. But I think that the extreme left. I mean, this has been going on. You're seeing the same things happen in with Brexit, okay, and with Boris Johnson, okay. The socialists do not want free. They want free money. They don't want free markets. They don't want capitalism. They want everything to be governed. They want to take away from the rich. Okay, they want to take away of the innovators of this country. Okay, so they're trying to eliminate people like President Trump, like Boris Johnson, who are free thinkers. Okay, but they both got elected. Okay, they were both not standard candidates. And don't you think it's about time we got away from standard candidates? So this whole impeachment to me is a big nothing. It's a big joke. Okay, and it's just another way. And it's either going to be one of two things. Either it's the left's final shot, and this will destroy the party as it is, okay, or they're going to be right. Now, again, I believe, and from my views, okay, from what I can discern, and again, I'm more of a libertarian. I am not right. I am not left. I am more down the center, okay, and I have voted on both sides of the aisle in my life. Okay, in my views, okay, they have sunk themselves. I think this was a horrible play, in my opinion. We'll see how it plays out. But in the meantime, what are you going to do? I mean, the biggest thing that my concern is the overall waste of time, waste of money, because if they're correct, then they can vote them out in a year. Okay, it's over. Okay? If they're wrong, then they've once again wasted 4 years of doing nothing. That's the way I see it. In the meantime, this has been Bubba's Bottom Line. It is September 29th. Oh, my God. The quarter's over tomorrow. We get football tonight. We like upset special. We like the New Orleans Saints to beat the Dallas Cowboys. Straight up tonight, we're taking the money line like we did with Philadelphia on Thursday. And to all of my friends who celebrate, Lashana Tova, Happy New Year. May it be sweet. And we'll see you all tomorrow with Bubba's Daily Update. Have a great day. Have a great weekend, everybody. Thank you so much. We'll see you later.